If you're thinking of buying your first home or moving up the ladder, one of the big questions is, do you buy a house or a flat? But did you know your choice can impact your mortgage and even your ability to sell in the future? In the UK, flats usually mean leasehold, often with ground rent and service charge payable. Houses are usually freehold, giving you more control and fewer fees. But beyond ownership, lenders look very closely at the type of property you're buying, and some property types raise red flags. So let's talk about what lenders often hesitate to lend on in the UK. In London and cities across the UK, high-rise flats, particularly those in ex-council buildings, can be trickier to mortgage. Why is that? Resale risk, cladding issues and communal maintenance all come into lenders' concerns. Now these properties can be good value, but lenders may be cautious if the building is poorly maintained or mostly rented by the council. Always check the lease, the service charge history and council involvement. If the property is an unusual construction such as steel frame, timber or prefab concrete, lenders prefer brick and mortar, so anything like that is going to be a concern and may need a specialist lender or a big deposit. If the lease on a flat is under 80 years, it could be harder to mortgage and you may need to extend it before completion, which can cost thousands. As well as the length of the lease, any onerous terms such as increasing ground rent can cause concerns. So how do mortgages differ between flats and houses? On a house you may get up to 95% loan to value if it's a standard build, but with a flat, especially one with issues we've just mentioned, you may need to get an 85% mortgage or even less, but there are always options available. There's also the effect on affordability, so high service charges can impact the amount that they'll lend. Now thinking beyond the mortgage, how will the property fit into your life? For flats, they can be ideal for city living. They've got lower maintenance costs and often more affordable for first-time buyers, and they give you security in the form of communal entrance systems often. Now for houses, they give you room to extend or renovate. It can be great for families and pets. You've got more control over your property because there's no service charge or lease complications to worry about. But don't just think about now, think about the resale value. Will this property appeal to buyers in 5 and 10 years' time when you're ready to move? Because lenders are asking the same question that you should be asking. Before you make an offer, ask yourself, is the property standard construction? What's the lease length of this flat? Are there any cladding or EWS1 concerns? Can you comfortably afford any service charges that will be payable? And how will this property suit your plans in, say, 5 years' time? And as always, get a good whole-of-market mortgage advisor who understands the UK market. It can save you thousands and a few sleepless nights. Flats or houses, there's no one size that fits all, but now you've got the facts to make the right choice. Thank you for watching and see you in the next video.